You are full bull this week, despite all the tariff risk.
Yeah, absolutely. Good morning, Tom. I think in this short term, I don't know why you'd be proactively bearish this week compared to your stance 2 weeks ago. Now, the backdrop picture is I still believe that US stocks continue to underperform as they have this year. But I think that, and that's because the rest of the world can outperform rather than being overtly bearish. But I think there will be times to be nervous about US stock markets given how expensive they are. But right now, the most recent developments are massive fiscal tailwind. We've had the big, beautiful bill passed in the US. We've obviously had NATO defense spending. We've had some really good macro data. And the tariff deadline has been quasi-delayed to some extent. I know there's some uncertainty. But at least compared to a week ago where we didn't have the bill passed, we didn't have that really good jobs data, ISM data out before the weekend, we didn't know what was going to happen on tariffs. Everything has turned marginally positive. Now, I understand, given the valuations, why people might want to sell into rallies to trim long exposure, but this does not seem like the kind of market where people are going to chase dips and try to get aggressively bearish. And so I think that we'll probably see US stocks, despite the fact they're trading weaker at the moment, I suspect we'll probably see them higher later on this week.
All right, Mark, so you're bullish on the equity market, but how does the U.S. dollar perform on this perhaps extension of the trade deadline to August 1st?
I've no real conviction on the short-term view. I think, unfortunately, it's the same story I've kind of said all year. Longer term, I expect the dollar to continue depreciating much further. In the short term, the dynamic is that the market has shifted from being the short-term market shifted from being very long dollars to being a little bit short dollars, and the pace that move makes people worried. But the fact is that structurally the world is very overexposed to the dollar. This week I have no particularly strong view of the dollar. If you made me pick a decision, maybe a little bit of a dollar bounce because of the squeezing of the BRICS nations on the latest threats over the weekend, but no particular conviction on that short-term view.
In the long term, though, Mark, let's talk about, or maybe not long term, maybe 6 months in TV, that is the long term. Talk to us a little bit about what matters more, trade negotiations or the deficit deadline?
I think trade is absolutely the biggest picture. It's going to kind of feed through over the next coming years. I don't think all the impact happens now. Let's just say that a month or two from now, we have all these tariff levels set. And there's no more talk about tariff deadlines and no more changes. It's still going to take years to feed through because what happens is after 80 years of US being absolutely in a special position as favored nation for doing business, you wanted to be in US supply chains, you wanted to get access to US markets. The world is suddenly going to go, it's not worth it. It's not worth it for the policy uncertainty. So as you get choices to change your supply chains or update over the coming years, you're going to turn away from the US. So the cost for US businesses is going to slowly increase over time. And that's even after the tariff deadlines. So trade is by far the biggest story for the next coming years.